Hi, I'm Jessie Walters from Charles Rutenberg. I'm here today with Julie Lepore, Director of FIRPTA. She's going to educate us on what's a FIRPTA. Welcome, Julie.
Thank you.
There
Thanks
you
for having
are. Oh, yeah, no problem. So we're going to break this down like I was just telling her before on the break that we're going to take it down to layman's terms because a lot of people don't even know what the abbreviations stand for or what we're even talking about today. So educate us, tell us a little bit about yourself and how long you've been doing this and what exactly we're going to talk about.
Absolutely. So I came to work at a accounting firm many moons ago and was introduced to FIRPTA by one of the accountants here, and I just took to it like wildfire. So
That's awesome.
I'm a little bit weird when it comes to learning new things. It's not enough for me just to learn it. I have to really absorb it. So I spent my evenings reading all of the rules and regulations and the instructions and the rev procs and the whole 9 yards, and really entrenched myself in what FIRPTA was really all about, at least from a residential real estate point of view.
Right.
And that's what we're going to be talking today. It's with FIRPTA is a withholding tax.
Mm-hmm.
And so once you can understand the concept of withholding and the importance of it and how it works, then you can see how it applies to real estate. So I don't know. Do I just answer your questions or?
Yeah. Well, so I know a lot of people. As a realtor, I think when we think of FIRPTA, we always think of. So I have that foreign person. They're selling something, and they don't have a social security number, and now this percentage is going to be, which I've been reading up on it because I knew you were coming on. So I always thought it was 10%. So and I wasn't a professional, but I was like, well, I think it's about 10%. And then I read. It's 15%. Is that right? They withhold?
Yeah. So it was 10% for a really long time.
Okay, good. I wasn't losing it. Good.
No,
yeah, good.
So in February 16th, actually, of was it February 16th? February of 2016,
Mm-hmm.
they moved it up to 15%. It can still be 10% in some circumstances, which we can talk about, but
Okay.
The general rate of withholding has been increased to 15% with the PATH Act.
Okay, and then what we're actually talking about is like we were saying, so I have I have a Canadian couple, and say they got stuck in I think that was a scenario, they got stuck with COVID, and they can't. Well, they don't want to come to Florida. They don't want to. They're home in Florida, so they sell this home in Florida, and then what happens from there is what we're talking about. So
okay, perfect. So I'm just going to back it up a little bit. So FIRPTA stands for the Foreign Investment in Real Property Tax Act.
Right.
So back in the 80s, it's the Tax Act of 1980. So back in the 80s, our government had this idea that we had foreign investors and we had U.S. investors. And U.S. investors were paying their fair share of taxes on the capital gain that they were making on these investments, but there wasn't anything in place to make the foreign person pay. They don't have social security numbers. They don't have tax ID numbers. They may or may not have ever filed a tax return in the U.S. before. They just don't play by the same set of rules that we play by. We have to file our taxes.
Exactly.
All of our income's getting recorded. And so the IRS came up with this tax act called FIRPTA that enforced a withholding tax to be paid at the time of sale. So anytime you have a foreign seller, and I'll tell you what a foreign seller is too, but anytime you have a foreign seller that is selling what would be considered a real property interest, right then and there, a withholding has to take place. Okay. And a foreign seller is defined as a non-resident alien, a foreign corporation, a foreign trust, a foreign estate, and a foreign partnership.
Right. Okay.
And FIRPTA comes into play in a lot of other areas too. Jessie, it's not just when they sell a house. It's when they sell a boat dock, if they sell RV pad.
Okay, that's interesting.
There's all kinds of.
Is it considered real property or?
Exactly.
Okay.
Exactly. And it's also, it could be shares in a company that are owned by a foreign person. So there's so much about FIRPTA that we're not going to be able to cover today.
Right.
So what we're going to dive into is just really real estate.
Right. And some of the foreign people that are selling, they may think, well, what do you mean withholding? Who's going to withhold my money? And literally when we were talking about, like, if you're doing a sale, the standard thing is to go to a title company and to actually have them, actually do your paperwork here. And even when you're a United States seller, when you make over $10,000, you're going to have to give your social security number. So that's when kind of like the jig is up. They know you're you don't have a social security number. You don't have, the actual corporation numbers or, stuff like that. And that's when they're going to know that you're going to need to do something about this tax, right?
Yeah, absolutely. And to be honest with you, FIRPTA has been kind of a pain.
Yeah.
For a lot of title companies and a lot of closing attorneys and a lot of people in general. And so they're definitely approaching it a little bit differently than they used to in the past, which is, in my opinion, the direction that we need to keep going.
Right.
So title companies, when they are doing a new closing for somebody, when they're taking on a new deal, it's part of their normal process to send out some sort of a sheet that says, hey, who are you?
Right.
Are you divorced? What's your name?
Right.
Are you going to be here for the closing? What's your address? How can we reach you? That kind of thing. And usually in that process, they will ask, are you a U.S. citizen or do you have a green card?
Right.
And if the answer is no to all of that, then that usually means that person is what they call a non-resident alien individual. Non-resident means that they don't live here.
Right.
Alien means that they're not a citizen. FIRPTA doesn't apply. The withholding tax does not apply to someone who is a resident alien. So like people that are here on work visas or work permits or investor visas that are living here, working here, paying tax here, they have socials, that kind of thing. They're taxed as a U.S. person.
Right.
So when they sell their property, FIRPTA doesn't apply to them. But it's that perfect mixture of non-resident plus not a citizen.
Right, exactly.
And the term is non-resident alien.
Right.
It's such a funny name for foreign investors.
Yeah. They have an alien in here. I'll have to show on the way. I'll show the picture.
Yeah.
I should have had him in the chair. That's why I should have had the because he is an alien, But I'll send you a picture after, so you'll be like, what is she talking about?
Perfect.
Yeah. But yeah. So if you're a realtor and you're watching this and you're like, well, I'm confused of how do I, just by looking at the listing, how do I tell just by looking at the property appraiser, you're going to see that non-alien resident doesn't have homestead exemption. And that the tax bill's most likely sent to another, that's kind of like my red flag is like it says Ontario for the tax bill. There's no homestead exemption on it. Then I know I need to ask a couple questions only because they're the ones who are going to be shocked when they go to get the funds. And the funds are withheld, right? Is that so?
Yeah, absolutely. So then once we've established that the seller is considered a foreign person by definition of what the IRS gives us,
right?
Then we have to look at a couple other parameters. How much are they selling the house? Who's the buyer? Are there any exceptions to the withholding?
Right.
And if not, then we have to look at the sales price. We have to calculate 15% of that sales price.
Right.
So let's take for example a $400,000 house. So you're a Canadian couple that can't come back to Florida, that isn't enjoying the fruits of their labor. They don't want the upkeep of this house anymore. They're ready to sell it.
Right.
They're selling this property for $400,000. 15% of $400,000, that's
$60,000. Yeah, that's a little shocking. Yeah. Yeah.
That's a lot of money.
Yeah.
So if you're this foreign person and you're selling this property and your real estate agent doesn't know enough about FIRPTA to know that this is coming down the road, and then you get to the closing table and your proceeds are short by $60,000.
Right, because you not only have your exactly. So you got your closing costs, and it's not like that rule applies prior to, because they're probably thinking, well, I have to pay commissions, I got to pay for my closing costs, and then it's 15%. Then no, it's 15% off the actual sales amount.
It is. It's 15% off that top number.
Right.
And granted, this FIRPTA withholding is a withholding. It's not an income tax. It's a withholding tax.
Right.
So what a withholding tax means is that it's temporary. It's estimated.
Yeah.
It's being held in advance for what you are actually going to owe in tax. Mm-hmm. So, they very well could get a giant portion of it, sometimes all of it back.
Right.
Depending on the parameters of their transaction, but, and how much money they're actually making on that sale. They can get all of that money back, but if you're not prepared for that, it's a big hit.
Right, exactly.
especially, in situations where people are trying to buy another property.
Yeah, exactly. Yeah,
You
you're
go to buy
short
another
60 grand.
property,
Yeah.
and you're missing $60,000.
Yeah.
I mean, it's a real problem, and I wish it was an isolated event, but it's really not. It seems to be a trend, something that I'm actively trying to fix. But
Yeah.
at any rate,
Yeah, we're like educating everybody now, but I mean, they may have a friend who, I sold one, and I think we had one was in Italy and one was in Canada and one was, but the house was, I think the house was, it was like 125. So it was like 125, and then they had, I think they all realized because they were all family that the one person who was a resident, actually United States resident, put it under there, because otherwise I was like, what a mess. We're having everybody. And again, that was through Nightberry Title, but it was kind of like we're having all these go all the way across like the whole world. And then at the end, they put it through the seller as the resident, from the United States. So we didn't have that. But I mean, you have to be quick on your feet otherwise, And what's the limits? So that was one question I had. What was the limits on if it's under 300,000, is it less than 15 or is it still 15%?
No, so the rate of withholding is going to be 15% across the board.
Okay.
But there are times that it can be reduced down to 10 and times where it can be waived altogether. And so what you're talking about, I like to loosely refer to as the buyer exception.
Right.
Because the IRS says that if you, the buyer, right, because this withholding responsibility, by the way, is the buyer's responsibility.
Right.
And it's because they're the ones that are making a payment. You have a buyer and a seller in a transaction, and the foreign seller isn't going to pay that tax on his own.
Right.
It has to be paid on his behalf. And so the IRS looks at the transaction. They're like, okay, well, we've got a buyer and we've got a seller. The buyer's the one making the payment. They need to withhold. And so the IRS holds the buyer responsible to determine if the seller's foreign and withhold the proper amount of money.
Right.
But they also give them an exception, an out, if you will. And the verbiage is that if the buyer has intentions of purchasing this property, and they have to buy it in their personal name,
right?
They can't buy it in the name of a company,
right.
But if they have intentions of using the property as a resident,
primary residence, right?
It doesn't have to be primary.
It doesn't. Okay.
No, it doesn't have to be their primary residence. It doesn't have to be something that they qualify for homestead. It can be something that they rent out seasonally. They just can't rent it out more than they or their immediate family members use it. At least that has to be the intention.
Right.
So it's interesting that you brought that up because that's one of the a common myth that people think that it has to be a buyer's primary residence, and it
right.
doesn't.
And you know what, to the newbie realtors watching this too, on the seller's disclosure, I think they all wonder because there's like I want to say page 4 or page 5. I think it's page 4, the seller's disclosure. The last question on there is, are you a foreign seller? You know what I mean? And so if you get that form, it says yes, and you're the buyer, then that's kind of like, that's a disclosure. You need to know because everybody just signed that, Mm-hmm. And so that's often, that's the deciding point there. If you're a real estate agent, you're automatically having them sign the seller's disclosure, and they're literally declaring to this buyer who doesn't know anything about this tax whatsoever that, yeah, I'm a foreign seller, and that's on there. Like I said, they've changed that. So it's on the actual seller's disclosure. So you are aware of that,
Good. It needs to
Scary.
be.
Yeah.
That's perfect.
Yeah.
Okay, so now the seller's, disclosed, and so now the buyer has to say, okay, I'm the buyer. I'm having this conversation with myself. Like, what are my intentions here? How am I going to use this property?
Right.
Am I going to use it as a primary residence? Am I going to use it as a second home? Is it going to be an investment property? Maybe I'm going to stay in it a couple months out of the year, but I'm going to try to rent it out the rest of the time.
Mm-hmm.
It has to be my intention as that buyer to use the property at least 50% of the total days that it's occupied.
Right.
So if I buy this property and I'm going to use it 4 months out of the year,
mm-hmm.
and somebody else is going to use the property besides me and my family, then I'm using it 100% of the total occupied days.
Right. Okay.
I only have to use it 50% of the total occupied days in order to qualify for this exception.
Right. Right.
So property, I'm going to live in it 2 or 3 months. I can't rent it out more than that, because once you rent it out more than you use it, then it tips the scales and it becomes an investment property.
Right.
And that's not what the IRS is looking for. So if as the buyer, if you take title in your individual name, if it's the sales price is $300,000 or less, and you have intentions of using it as a residence, the minimum, at least 50% of the total occupied days,
Right.
and that's your intention for year number 1 and year number 2, then you can rely on this exception and not withhold.
So it's 2 years that you have to have this intention to occupy it?
Right.
Okay.
But it's 50% of year 1 and 50% of year 2. People think that, as long as I use it half of the 2 years, in other words, let's say I buy this property and there's a renter in it currently.
Right.
So they're gonna finish up their lease. They're gonna stay there for another 9 months or whatever, and then I'm going to move in. That wouldn't work.
Right.
Because it's not 50% of the 2-year period. It's 50% of year 1 and 50% of year 2.
I can see a lot of people trying to get around this and messing this up really bad. So
Absolutely.
Yeah.
Well, the real problem is, it's great for the seller because that means that there's no withholding at the time of sale.
Right.
But for the buyer, they really are taking on a little bit of risk here, because if they don't maintain the minimum number of days,
right,
and our government audits the transaction, and they don't like the buyer's reason as to why they didn't maintain the minimum number of days, and if that seller really was foreign and they never ended up filing a tax return, the buyer could be liable for that withholding. So
that's scary.
There's definitely some risk there.
Right. Yeah, that's
but
scary.
Again, the whole code speaks to intention. So I mean, it feels very vague in my humble opinion.
Yeah, exactly.
Vague at best.
Yeah.
But there's a lot of buyers that just don't want to be bothered with it. Like, think about it. If you were buying from a foreign seller and you had an opportunity to sign an affidavit that you're going to use this property for 2 years, and then now all of a sudden the seller doesn't have to pay, have any withholding tax withheld from their proceeds, like, why would I want to do that?
Yeah, exactly. Yeah. I've seen it. I've seen people disclose that on the MLS too. Like, they have a foreign seller, and they'll say, no foreign buyers, please. They actually state that. Of course, the public can't see it, just us realtors. I'm sure some realtors are like, why would they? But this makes all sense, when you get the actual, the guidelines and stuff. But thanks. So we're going to hear about where you come in. We're going to take a 15-second break. Me and you're going to take like a minute break, and then we're going to come back. And so thanks so much. And we're going to answer how you can help the buyer and the seller, and we're going to go back and forth. So everybody stay tuned. Hi, welcome back. I'm Jessie Walters from Charles Rutenberg. I want to thank our sponsors today, Nightberry Title Solutions, and also Delynn Gaston with the mortgage firm. And I just want to thank you guys for sponsoring us today. Today we actually have Julie Lepore. She's a director for FIRPTA, and she's educating us on what's a FIRPTA, how to use a FIRPTA, how does it pertain to you as a seller and a buyer. So welcome back, Julie.
Thank you. Thanks for having me.
No problem. Yeah. So we got to basically where we're kind of deciding who, as a buyer, if you're going to have that withholding, how you have to live in the house. And then we were kind of going over that. So tell me more educate us more.
Okay. So just along those same lines, we talked about there being a complete exception from the withholding, or an exemption from the withholding.
Yeah.
When the sales price is $300,000 or less. If the buyer's going to use the property that same way we've been describing.
Right.
But the sales price happens to be over $300,000, as long as it's under $1 million, it can be 10%.
Oh, okay.
So just
That's
to
where the
recap-
10%. See, I knew something.
Yes.
I knew it.
Yep. So just to recap.
I got so excited then. I'm like, I was right.
15%, yep. It's 15% across the board, especially anything over $1 million, anything that you can't live in,
Right.
like vacant land, RV pads, those kinds of things. Definitely going to be 15%, but it can be 10% if the buyer is going to use it as a residence between the 300,000 and $1 million, or it can be completely waived altogether if it's $300,000 or less.
Okay.
Okay, so that's one exception.
Okay.
Another way that the withholding can be reduced is when somebody applies for what they call a withholding certificate.
Okay.
And a withholding certificate is a way for, and I'll be honest, it can be applied for by the buyer or the seller, but typically the seller applies for it.
Right.
But it's this application that they make before the closing where we put together all of the data on the sale. What did they pay for it? How much are they selling it for? What are their selling fees? What kind of improvements did they make? Was it a rental? Is there any losses, depreciation? All these factors go into actually
Right.
determining how much gain is on a sale.
Right.
But
Kind of like how you do your taxes with your writing it off and everything. Right.
Exactly. Yep. So we put together this application, we send it off to the IRS, and then eventually they respond and they say, we agree that your numbers are right. We don't need 15% of the selling price as an estimated tax payment.
Right.
We only need X. So whatever that certificate was applied for and approved for is the reduced amount. Now, very rarely can that application be applied for and received before closing. I've only actually ever seen that one time in my life.
Oh, okay. So what's the timeline on this when we're filling out all the paperwork?
Yep. So a withholding certificate traditionally takes around 90 days for the IRS
Okay.
to respond.
Yeah.
So what happens is, we normally don't have that much time before a closing happens. So what we
Right.
do is we make the application, the closing occurs,
Right.
closing takes place, but then whoever did that closing, that escrow agent will hold on to that 10% or that 15%, whatever it ends up being. They'll hold on to that in an escrow account.
Right. Until you get the paperwork
And
back.
then we wait for the IRS to respond. And then when the IRS responds, those funds can be dispersed.
Okay. Got you.
X amount of dollars goes to the IRS, and then the balance can be sent to the seller. So it's a really nice tool. Now, before COVID, that process used to take about 90 days.
Right.
That does not exist anymore.
Oh, no.
At least not right now, not in our
Yeah.
current climate.
I know everything. I blame everything on COVID. I was late, 10 minutes late, COVID. No, I'm just joking. Pretty much that's like everything, like, lumber, because, I do like the fixer-uppers, the lumber, the flooring, the refrigerators, the washers, the dryers, we're talking everything is still, look, my closing agents, SunTrust, BB&T, Truist, COVID. Everything's delayed for COVID, but sorry, don't get me started. I had to go on rampant.
I know what this isn't about this podcast is not about COVID, but it's astounding.
Yeah.
The trickle effect and the impact that COVID is having
True.
on bits and pieces of our lifestyle that you don't even realize is being affected. So,
Exactly. Yeah.
but as far as the IRS is concerned, in March of last year, they shut down.
Yeah.
They
True.
sent their staff home to work from home and answer phones from home. And unfortunately, the department of the IRS that works on FIRPTA related cases, it's all paper mail. There's nothing electronic about it.
Oh, wow.
So when they went home to work from home, they couldn't take those paper files with them.
Right.
So
Yes.
they just didn't get touched
Oh my gosh.
for about 4 or 5 months.
Oh, wow. So everybody who did a transaction, their money's just sitting in escrow waiting,
Yeah, to be honest with you, our company, we have, I don't know, a couple hundred applications in process, I would say. And we are still waiting on responses from files that we submitted in April and May
Oh my
and
gosh.
June of last year.
Oh, wow.
Now, I will say this, they are picking up speed.
Yeah.
And they're getting to them.
Yeah,
really,
everyone's
really
kind of
quickly.
getting the organizational thing down. I have it with the building departments too. But when you talk to them, you can hear dogs barking. And then, I laugh because I go, "Are you at home right now? You're busted." She's like, "Yeah, that's my dogs," because my dog was barking too. So like I was just laughing because everyone you talk to, IRS, they're at home. Building departments are at home. Tax, it's crazy, But
It is. So But just to answer your question, the processing time have been extended from the traditional 90 days
Right.
to about 9 months.
No, oh, wow. Okay.
But to be honest with you, it's still a really good tool because 9 months from now puts us at December.
Right. Christmas time.
Exactly. So, if I were to apply for a withholding certificate today and the IRS maintained their current processing times, then we could have an answer by, October, November.
Yeah.
December.
This year. Yeah.
Exactly. And so think of the sellers out there. Think of the foreign sellers that are selling these properties that aren't making any profit.
Right. Right.
Maybe they're taking a loss or maybe they're breaking even or maybe their profit is, very, very minimal.
Yeah.
So when I put together this application and I send it to the IRS and I show that their profit is so small, I can get that withholding reduced down to pennies.
Right.
Sometimes just zero.
Right.
The IRS doesn't want any money because there's a loss. So when that certificate comes in December and that escrow agent is holding those funds, and now we can release them, that means that seller can get their money right then and there. It never has to go to the IRS.
Right. That's amazing. Yeah. So that's where you come in. You're saving everybody money. So it may take, you're patient, but the payoff is good.
Right.
So, yeah.
Alternatively, if we don't do a withholding certificate, Jessie, what happens is that full amount, that 10% or 15%, again, depending on the buyer and the type of property and the sales price and their use,
Right.
10 or 15% just gets sent to the IRS immediately.
Oh, wow.
And it sits there until we can file a tax return. Well, we can't file a tax return until, February
Yeah.
of next year?
Right,
March
exactly.
of next year?
Yeah.
And then the IRS has a published processing time of around 6 months on those non-resident tax returns.
Right.
So if I file in March and it takes the full 6 months, you're talking about September of next year
Right.
before they're going to see a penny of that money.
Right.
So when you're comparing the options, it's like, okay, do I want to get my money in December of this year, or do I want to get my money in September of
Yeah,
next
too, and you're going to get more money if you fill out the paperwork. It sounds like I'm going to get possibly all my money back, but if I do it myself, I could not only wait for the whole time, right? To actually, they're going to keep the whole 10% or 15% possibly, right?
It doesn't necessarily mean more of your money because your tax is your tax. So
Right,
whatever.
right.
So in the example that I've been using, let's say that someone took a loss on their property and we apply for a withholding certificate and the IRS comes back in December and says, hey, you're right. We don't need any tax paid up front. We don't need there to be a withholding tax paid because you took a loss.
Right.
And you don't pay tax on a loss. So that certificate that they issue is going to come in for $0. And so I take that certificate, I take it to the escrow agent, I say, look, the IRS doesn't want any money. And so then they can release that money back to the seller.
Right.
They don't owe any tax.
Yeah, it's awesome.
But using that same client, that same seller, let's say we didn't do a withholding certificate. So now 15% was collected.
Right.
And now in February, I do the tax return and I still show that same loss.
Right.
And so when we submit that tax return, the IRS processes the tax return, sees that there's a loss, and they just refund the money because no tax was owed.
Right. But you're saying,
the type of withholding that you see on these type of transactions is no different than withholding that you see on the average person's pay stub.
right. I was going to
So,
say,
you're
yeah.
a real estate agent, so
Yeah.
you're probably self-employed, but I work for a company. So when I get my paycheck every Friday, I have withholding taxes
Right.
taken out of my check.
Yeah.
And those withholding taxes are based on what we think I'm going to owe in taxes.
Right.
And so my employer, FIRPTA Solutions, collects all that money. They send it to the IRS on a quarterly basis. And at the end of the year, they give me a receipt. And we don't really call it a receipt. We call it a W-2.
Right.
But it's a receipt.
Yeah.
It's basically a record of all the money I've earned, all the money that was taken out of my paycheck. And when I go and I file my tax return, I have to include that in my return as evidence of what I've paid.
Right. Exactly.
So now when I go file my tax return, if all that money that came out of my check is more than enough to pay my taxes, then I get a refund.
Right.
If it wasn't enough, then I end up owing more, but
Yeah.
but that concept of taking the money out in advance in anticipation of what you're going to owe in tax is exactly what we're doing on these real estate transactions, except for a foreign seller doesn't get paid every Friday.
Right. True.
They get paid when they sell a house, and their paychecks are huge.
Yeah.
They're, $60,000, $600,000, $6 million, $60 million, like
Right.
whatever it is that they're selling that property for, those proceeds, it's almost like a big giant paycheck.
Right, exactly.
And so that tax has to be collected right then and there and paid over to the IRS. Now, when
Right.
that person goes and files that tax return and they settle up with how much tax they owe, then they can get a refund of any amount that would have been considered an overpayment.
Right. Okay.
Does that help?
Yeah. No, that makes sense. And so otherwise, if as a, I guess it's thinking of it as a, okay, I'm a United States citizen, and all these foreign investors are coming in, and they're buying and they're flipping properties, and then there's no recourse. So it's kind of like we have to pay. If I have a property and say I bought it for $100,000, I sell it for $200,000. It's there's $100,000 profit. I write off all my repairs. I still have that where I have to show and I have to pay. Like 10% on that 100,000, I'm going to pay 10 grand. I'm just an investor here. But whereas if foreign investors are coming in, they're flipping properties and they don't have any taxes. And this is what this is for. It's not because,
Exactly.
it's not because we're trying to be mean. It's just because we have to pay. So everybody's got to pay, and the IRS knows that,
It's just a mechanism to make sure that everybody pays their fair share of taxes.
Right.
And if you and to get them to file a tax return and give a record of how much they owe.
Right.
That's why do any of us file a tax return?
I don't know. We don't want to.
Exactly. So it does. It just levels the playing field.
Yeah.
And it provides that mechanism that's going to force their hand to, pay their fair share of taxes and file a tax return and settle up with what they owe.
Right, exactly. Yeah, so I know that I had got your name and information and stuff from Nightberry Title, and they're one of the ones that I use. Obviously they're my sponsor, but Nightberry, they have the escrow there. I mean, that's like hand in hand. You can be partners with when you're doing a actual transaction, and you're the title company, and they're holding that. You can do the paperwork for them through that title company. You guys or do you guys prefer like your own title company, or is that what you?
No. We'll work with any title company across the nation that will work with us.
Right. Yeah, you're like, we're friendly. Please work with us.
Well, you bring up a really interesting point because there's not all real estate agents are created equal. Not all accounting firms are created equal. Not all title companies are created equal.
Right.
And in some states, they don't use title companies at all. They use closing attorneys. In Florida, we're pretty used to using title companies. But if you're a real estate agent and you're listening and you work with foreign sellers, or if you are a foreign seller and you're wanting to sell your property, a withholding certificate is an option. Mm-hmm. It's not a guarantee.
Right.
So, especially like according to our Florida real estate contract, it says right in the verbiage that the buyer gets to decide if those monies can stay in escrow or not.
Right.
So it's, just with any matter, anytime we're doing a real estate transaction, we're trying to put the pieces together. We really need to be aware of what all those pieces are. Because if I'm a foreign seller or I'm representing a foreign seller and they're taking a loss on the property, they're definitely going to want to apply for a withholding certificate.
Exactly. Yeah. That makes sense.
So we need to reach out to the title company and say, hey, listen, we've got a foreign seller and, they've already been vetted by FIRPTA Solutions. They really want to apply for this withholding certificate. Are you guys okay to hold this money for the 90 days or the 9 months or the however long it takes?
Right.
A lot of title companies don't want to be involved in that. They've been burned in the past, or maybe someone's helped a seller and wasn't paying attention, and maybe the certificate got lost in the mail or the money didn't get sent on time, or whatever the situation is.
Yeah.
It caused problems. And so now they're a little shy to do that again.
Right.
So, just because it's an option that's given to us by the IRS doesn't mean that it's something that we can put into play.
Right, exactly. Yes, you want to confirm that with the title company.
We want to get confirmation that the title company that's going to be doing that closing is on board and can hold those monies.
Right.
Is the buyer on board that the money can stay in escrow? Again, the contract says they get the final say.
Right.
So you might want to make that a condition of the contract if you know that a withholding certificate is going to be ideal for the seller. One of the reasons why we push so hard for the withholding certificates, especially when we know that they're going to be able to get a big chunk of their money returned to them, has to do with the country that they're in. For example, I'm going to take, this is probably a bad example, but I'm going to take like in Japan.
Okay.
We had a seller that was from Japan that owned property here. And when they sold, there was this withholding, and they weren't allowed to do the withholding certificate. We couldn't keep the funds in escrow. So all of this 15% went to the IRS. Well, they didn't owe it because they took a loss.
Oh, okay.
And so they were eligible for a full refund. But our government cannot make a direct deposit into a foreign bank account.
Right.
So they had to print a check.
Yeah.
And send it to them. Well, they have no way of cashing.
Yeah. Unless it's
no way
a
of cashing
international money order or something, right? Yeah.
They couldn't do it.
Oh gosh.
So if we would have been able to do a withholding certificate from the beginning,
Yeah.
and we would have been able to get that money cleared, then the title company could have issued an outgoing wire, to an international account. So that really hurt that client really bad. And to be honest with you, I really don't know how that ended up. I don't remember how that ended up, but
yeah,
those are the kinds of issues.
Yeah, because even opening, so you used to be able to open a bank account here so easy as an international person, but now, I mean, you not only, they want to see your driver's license. Oh, guess what? You can't get a driver's license anymore. That as easy. You can if you're if you have your green card being your resident, but if you have like a temporary, like you're working here, stuff like that, but they don't just hand the stuff out anymore where they used to. They also used to get the federal identification number too, pretty easy. Is it federal FID or the federal ID?
So, you're talking about like tax ID numbers. So,
Yeah.
You and I, we have social security numbers.
Right.
Individuals that are foreign that aren't eligible for a social have to apply for an ITIN.
Okay,
but
that's
then
it. I couldn't
companies get an EIN. So maybe you're thinking a federal ID number would be like a EIN maybe?
Yeah. Yeah, they used to, that was 20 years ago. I'm thinking of the foreign customers I had,
That's definitely changed.
Yeah, exactly. Yeah, so we're going to take a 2-second break, you and me, and then we'll be right back. Everybody stay tuned so you can just hear how to work this out for the FIRPTA. Thanks. Hi, welcome back. I'm Jessie Walters with Charles Rutenberg. I'm here today with Julie Lepore, Director of FIRPTA, and she's educating us on what's a FIRPTA. Welcome back, Julie.
So Jessie, I have a question for you.
Yeah.
Have you worked with any buyers lately?
Yeah.
When was the last time you had a closing with a buyer?
Yesterday at 10:30.
Was the seller foreign?
No.
How do you know?
Yeah, exactly. You know what, though, as I'm saying that, their names were, in my head, I was like, actually, yeah.
So it's interesting. I love putting people on the spot like that because the reality is we don't know.
Yeah. You're actually,
we can't go by we can't go by
trust.
name. We can't go by accents. We can't go by.
But it was a foreign.
Anything.
It sounded foreign. The name sounded foreign. Now that you got me like that, I'm like, oh my gosh. Oh no.
Yeah. One of my favorite stories that I always have a little giggle about is there was a title company here locally. This is years ago. And they called and they said, Julie, we need your help. We have to apply for tax ID numbers for our sellers. I said, okay, no problem. When's the closing? And they're like, it's right now.
Oh my God.
I was like, what do you mean it's right now?
Yeah.
How did you not know your seller was foreign? And her response was, well, I didn't know because they didn't sound foreign.
Oh, nice.
And that can't be, the determining factor. So, if the IRS is going to hold the buyer responsible to determine if the seller is foreign or not, you almost have to take the position that that every seller is foreign until they prove to you that they're not. So,
That's probably
you know,
true.
we
Yeah.
talked about a couple exceptions, like the buyer residency exception and a withholding certificate exception. But being a U.S. person is considered an exception to FIRPTA.
Okay.
Okay. So what that means is, if you think about it, every seller is foreign or they're not, right?
Right.
There's no in between. So you either have a foreign seller or you have a U.S. seller.
Right.
And if I'm the buyer and it's my job to find out how could I possibly know?
Right.
Do I have to hire a private investigator? Do I have to look at tax returns? Do I have to like follow them around and see if they've got kids and where they go to school and go to church at? No, we don't have to do any of that.
Right.
There's a affidavit. I'm going to just refer to it as the non-foreign affidavit. But if you're not foreign, if you're a seller and you're not a foreign seller, then you have to put it in writing. You have to make a sworn statement that you're not foreign, and that sworn statement has to have your name, your U.S. tax ID number, your home address, and it has to be signed under penalty of perjury.
Right. Oh, yeah.
That sworn statement I like to call the golden ticket of FIRPTA, right? Because the buyer is allowed to rely on that affidavit in whole unless they have actual knowledge that it's being signed falsely.
Right. So, the seller's disclosure I told you about, which they have a seller's disclosure on properties, which has that in there, one of the last questions. But, when you just asked me that, what I sold yesterday land. And the land didn't have that on there. It had no foreign. But, I mean, my seller is one of my neighbors, so I know that she's not foreign. But the buyer, I have no idea. So.
Right. Well, really what we came up with this hashtag. It's hashtag FIRPTA first.
Okay.
And it's just this really basic concept that every real estate transaction is subject to FIRPTA first.
Okay.
Until it's not.
Right.
Because I feel like, from my end of things, we get phone calls all the time from buyers who are getting notices from the IRS that they owe thousands and thousands and thousands of dollars.
Right.
So what happens in these transactions when you're not paying attention is that the money gets collected, but sometimes it gets sent in late for whatever reason. The closing agent went on maternity leave, or someone went on vacation, or someone just wasn't paying attention.
Right.
So if you're not a closing company that handles these types of foreign transactions on a regular basis, you don't have an opportunity to develop a procedure around it.
Right.
And so you're just kind of winging it when you get a foreign seller. And so a lot of things can go wrong. And when that money gets sent in late, the IRS is going to assess a penalty. Well, since the withholding was the buyer's responsibility, guess who gets the penalty?
Oh my gosh. Came out.
The buyers.
Yeah, they're probably all in shock.
Penalties are extreme. I'm talking, I've seen a penalty. Not a withholding due, but I've seen a penalty, an actual IRS notice where the penalties that were being assessed were upwards of $180,000.
Oh my gosh.
Okay.
Yeah.
And it has to be paid.
Yeah.
What happens when you don't pay?
The IRS. Yeah. You don't
your wages get garnished, your properties get seized. This is happening on a daily occurrence. I mean, we're working with a ton of people right now that we're trying to help abate these penalties because, they just, they didn't know what was going on. And unfortunately, the IRS always comes back and says, sorry, not knowing is not an excuse.
Exactly. That's exactly right. Yeah. Just because you have no idea doesn't mean, it's just like breaking the law. Just because you didn't know there was a law in place there doesn't mean you get off because
exactly.
ignorance.
Just because you didn't see the speed limit sign doesn't mean you're not speeding.
Right.
And so it's Makes sense. Basic concept too when we're talking about the IRS and these penalties, and the penalties are extreme. So if I could give one bit of advice, it would be if you are a buyer or you're representing a buyer and you're going into a real estate contract or into, you're starting to make your offer here, just assume that your seller is foreign until they give you that statement that they're not.
Right. Yeah.
The IRS tells the buyer to hold on to that affidavit in their records for 5 years.
Oh my gosh. Right.
So it's a really important document.
Yeah, exactly.
And if they can't give you that statement because they don't have a tax ID number or they can't claim that they're not foreign, in theory, that's how the buyer knows to withhold.
Right.
don't get that document.
Right.
So that would be my one little bit of advice is FIRPTA first.
Right.
Every transaction is subject to FIRPTA first. Now, as far as the services that we provide here, we work with buyers and we work with sellers. I would say 90%, 95% of our business is sellers because we're helping them apply for ITIN numbers. Or if they're a foreign company, we're helping them to get an EIN for their company.
Right.
We're preparing withholding certificates. We're preparing the remittance forms to send the money to the IRS. We're filing tax returns for these guys to help them claim a refund. We are working on deals that have gone bad or providing some sort of consultation to the sellers. And then on the buyer side of things, it's amazing. I like to think,
Yeah.
I like to think that the last 3 years of my life are finally starting to pay off because we recognized this issue with the buyers not being educated about FIRPTA years ago, and we started this push for education. And I've trained thousands and thousands and thousands of real estate agents and thousands of title companies and thousands of attorneys across the nation, just trying to create awareness about this so that we can start approaching FIRPTA differently.
Right.
But lately we've seen that the buyers are taking more of an active role.
That's good. Yeah.
In the withholding. And so the problem is that they go to their accountant and their accountant doesn't have the experience in this genre to help them. They're great at what they do. They're amazing with the tax returns, but they just don't know FIRPTA 100%.
Right.
So then they go to their attorneys, and their attorneys are not international tax attorneys. They're just attorneys.
Yeah.
They don't have, they're missing that little piece of the pie.
Yeah.
And so they'll come to us and they'll say, listen, I'm buying this property. I know that the seller is foreign. They're talking to me about withholding certificates. They're wanting me to sign all this stuff. I don't understand it.
Right.
Can you help? Can you just help us? And we do. We have a program that we developed called Buyer Priority, where we're literally just kind of like their backup. We're working with their attorneys. We're working with their accountants.
So
we're helping them understand. Awesome. We're not providing any legal advice, but we're just monitoring the situation. We're understanding the deadlines. We're making sure that money gets sent on time. We're helping them to understand what a withholding certificate means and do they want to hold the funds in escrow.
You're steering the boat, and they're like, otherwise they're sinking. It sounds like
we're steering the boat. Absolutely. And so that's our Buyer Priority program. But there's really not a lot that we don't do here, and we're not a greedy group. So we're not an all or nothing kind of group. So we work with tax professionals and tax attorneys and real estate agents and our goal. I
saw that you guys even help with the continuing education for real estate agents too, which is you guys are set up to do that, right? To get the 3E continuing education or 3 point.
Yeah, absolutely.
That's awesome.
What? Because when you look at FIRPTA transactions that go smoothly, no one needs to talk about those.
Right. That's life right there.
Transactions that go bad.
Yeah. You're never going to forget your whole life.
When you start dissecting that and get to the bottom of what went wrong, 100% of the time, it's somebody didn't know what they were doing. It's just a sheer lack of education.
Right.
And so if that's the root of all the problems, then that's the problem we have to fix. And that's what we've been doing for the last 3 years here is really pushing. So I've done at least 200 training seminars.
Oh, wow, it's awesome.
In the last couple of years. I can't really say that about 2020 because no one was doing any traveling.
I know it's her on the Zoom right now, but it'll get back to normal soon, but that's awesome. So you're educating and everything. And that's why I wanted you guys to come on, or you to come on, because I just don't think that people know that this is even a thing.
They don't.
Yeah. And they just whiz through that seller's disclosure and it's on there or it's not on there and they just sign it and we're off to the next, thing,
Yeah,
so
they're definitely not paying attention. That's for sure. So
this is one of the only times, well, not one of the only times, but you hear about the IRS liening your home, and so people will say, well, if I, was a drug dealer, the IRS, or if I didn't pay my taxes, IRS, but like in very few cases, IRS can lien your house, and this is one of those cases where
absolutely
they owe this money and you've paid out, but you don't understand that they should have withheld that money. So it's actually definitely interesting,
It's a very real problem.
Yeah.
It's
Scary.
a very real problem. And until it happens to you, or until it happens to, one of your clients, it doesn't feel real. Like it's something you should be concerned about. But I always get confused about this saying, but what is it? An ounce of prevention is.
Yeah.
I don't know.
Yeah. It's too early for me, but I know what you're talking about.
I think it just comes down to just be aware. FIRPTA is a real thing.
That's
it's a part of our tax code.
Yeah.
It has to do with real estate.
True.
Another one of my favorite stories is that we presented at the National Association of Realtors. We had a booth at one of the events years ago in Chicago, and we got to meet thousands and thousands and thousands of real estate agents. And a lot of them were like, "Oh, what's FIRPTA?" And it's like, okay, I get it. Maybe you're from a state where they don't have a lot of foreign investment. I get it. But you're like, it's that pesky withholding tax when you've got a foreign seller. And they all said the same thing. "Oh, I don't need to worry about FIRPTA because I only work with buyers." Yeah. And I was like, wow, that's got to change. Yeah. That mentality has to change. You absolutely have to know about FIRPTA. Everybody needs to know about FIRPTA.
Yeah, and the worst way to learn about FIRPTA is not learning about FIRPTA. You know what I mean? Like, you know what I'm saying?
It's FIRPTA teaching you a lesson.
Yeah, where you're sitting there and you get that call where someone's hyperventilating, and that would probably be the worst nightmare,
Honestly, that's really what changed for me is I got a phone call from a man who was sobbing.
Yeah.
On the phone, and I couldn't do anything to help him.
Yeah.
And he bought this property. They had a ton of money and bought this really expensive property, and it didn't get handled right. And from the time that he bought the property to the time that he got his notice, he had lost his job. They had pretty much lost everything, and they were not able to pay this penalty. So I don't really know how he ended up handling that. But when you hear a grown man cry on the phone sobbing because he's about to lose his property, it changes who you are inside.
Oh, yeah, because then you're, like you said, on a mission to educate people.
Absolutely.
Yeah. Well, that's, on my show, because we just take it from layman's terms up. So we have like a lot of new realtors who watch this, and a lot of customers who are purchasing, and first-time home buyers. We have loads and loads of different people from all the way to Tampa Bay area, who are just trying to get educated. And, Florida especially is one of the states where people come on vacation. So for me to think that there's not a foreign buyer or seller here would be crazy. I would be out of my, I'd be on my mind, because half my customers have a friend who's, lives in Canada, or like I said, or lives, like I had the ones that are Italians that, and then some of them, I have a group of people, they're all from Bosnia, stuff like that. So you're constantly, they are moving here. And if they don't have like their, the ones I'm like in my head, as we're sitting here, I'm like analyzing, like, do they have work visas? Am I going to jail?
They have a green card.
Yeah. Yeah. Were they married to an American? I just like go through that in my head real quick. Yeah. So, and you can't tell everybody to go out and get married to a United States citizen prior to your house sale, because that would be wrong. So I'm just kidding.
Yeah. That's usually not a good.
Yeah, it's not a good idea. Approach. That's a whole nother show of where we try to get you out of trouble with that,
That's another show.
That is another show. But yeah, that's great. So you'll work hand in hand with a CPA or an accountant or an attorney, or
Absolutely.
Even. Yeah. So
our goal is to protect the buyers and put the sellers in a position to get their money back.
Right.
That's really all we care about.
Right, and not to get that lien on your house, and to have the transaction a safe transaction for everybody. Yeah, that's awesome. So we won't go into fees. I know as we're talking, your information has been coming up to basically like contact you if anyone's going through this right now and never thought that anybody would have a show about this to kind of educate everybody. So if you're having a problem, you have a foreign buyer or seller, and you just have questions, obviously can reach out to you. And I'm sure, you're super educated on this. So like you said, it sounds like you eat, drink, and sleep this FIRPTA,
I do. I really do. It's almost like FIRPTA is a cocktail.
Yeah. Yeah, you're like, it's my thing. Yeah, sometimes when you're good at it, that's the same, like real estate. I'm always like, what's that? You like that one more branch. Like this for me is another educational branch of like things I didn't actually, which I knew about because I've dealt with some foreign sellers and stuff, but back like the last one, when they were like, we're foreign, we're from England, I want to say this was like, gosh, it tells you how old I am, like 16 years ago. And they like I said, they went and got, they drove to go get their number. And then the transaction went like that, with the number. So like now I'm like 16 years of interest. The IRS going to come looking for me, But I'm sure it went well because I have never heard. So I'm like, touch wood, quick. But that's awesome.
Well, hopefully after hearing this, you just, some things you can't unlearn.
Yeah.
So that's my goal, is if I can just touch enough people, if I can just say it enough times, that it's just going to sink in where it needs to sink in, and we're just going to be doing FIRPTA differently from now on.
Right, exactly. Well, this is definitely going to be on all my information and stuff, so people will be reaching out to you on it, and I'll educate people as I go. So thanks so much for joining me, and thanks everybody for sitting tight and joining and getting educated with me. I have some listings I was going to throw up too. We have 15127 Surrey Bend. That one is $359. It's a beautiful home. It's located in Silverthorne community, golf community. So you have golfing and tennis courts and swimming pool. That's a gorgeous house. That's the front of it. And you can kind of see it has the 3-car side entry garage. There's the dining room, formal dining room area. Then it has a formal actual sitting area too, which is real pretty. And it's a beautiful home. The kitchen has not only the bar on the island, it has the actual bar on the other side too. It's huge. This one's 10249 Buncombe. This one's under contract now today, but we are taking backups if anyone is interested. That one's in San Antonio and Tampa Bay Country Club. But thanks everybody for joining me today. Always look forward to seeing you guys. Have a great week, or it's actually Saturday now, so have a great weekend, and I will talk to you guys soon. Buying, selling, you need any help, just give me a call. And special thanks to Nightberry Title Services for our sponsor, and Delynn at the mortgage firm. Thank you.